So, welcome to Follow the Money. This is the podcast that gets behind the headlines of financial crime and talks to the people who are doing the work stopping it. My name's Dr. Nicola Harding, and today we're talking on one of the most talked about and least understood tools in the field, and that is intelligence sharing. My guest today has an unusually fast and unusually revealing introduction to it, because Barnabás Ferenczi is head of growth at Salv, and his story at Salv began actually before he joined it. He was at G&D, which is a global security technology company, where he was already championing Salv's intelligence sharing platform Bridge from the inside. And it was here that he was convinced enough to leave and join the team that were building it. In the 2 months since, he's been on the road almost constantly, sitting down with banks and regulators and financial crime leads across multiple countries, getting inside the national level conversations to decide who will decide whether intelligence sharing actually happens. And that run has culminated in EBAday 2026, where he pitched Bridge to a panel of industry judges in the Fintech zone competition. And congratulations, Salv won. Barnabás arrives with something quite rare, and this is a wide-angle view of what intelligence sharing actually looks like across Europe right now, and a clear sense of what is genuine and what is merely claimed. Barnabás, welcome to Follow the Money. Thank you so much for being here.
Thank you. I'm looking forward to the conversation, Nicola.
So let's just dive straight in, and let's start with the move itself. You left G&D, which is this established, really well-known global security technology company, to join Salv, who you'd already been backing from the inside anyway. What did you see in Bridge that convinced you to bet your career on it, really?
Well, I think the time has come that we move from individual defenses to collective defenses. So the mission that really inspired me was that we need to bring the parties, the banks, and maybe after banks also a broader set of parties together to fight financial crime. Because financial crime, money laundering, but especially fraud and scam, it became so bad that we need to have also a new approach to fight it. And this is like a mission that is always in the background when I'm focusing on business.
I always find it really interesting that when we're talking about fraud and financial crime and intelligence sharing, because as a criminologist, I'm not looking at cybersecurity or physical security or fraud and financial crime as separate silos. Actually, they come all together. And I think intelligence sharing is a really important piece when it comes to that, because we shouldn't silo that information. It shouldn't be like, we're a cybersecurity company, so we only talk about cybersecurity. It should be that flow of the right information to the right people at the right time. Is that coming from a security technology company into more specifically financial crime? Is that something that you found that this can help break down the silos?
Absolutely. And it actually comes even earlier, because before I worked at G&D, I worked in a central bank in various roles. And in the central bank, you get infused with this public policy mandate. You are there to make your economy, your society, even using big words, better, especially if you come from a region which is, let's say, catching up like Hungary and Central Europe was and still is. So this was the kind of mentality that I was growing up with as a young professional. And as I joined G&D, I really went into the thick of the payments industry. So I worked on the cash side of the industry, on the card side of the industry. I've seen a lot of fraud trends, and also the work of the industry that we also supported and enabled at G&D to improve the defenses. So the thinking that fraud and crime, financial crime, is a joint responsibility originates in this public sector thinking that makes now for me much easier to engage with central banks, with regulators, with bank associations, because they also have this public sector type of mandate. And in payments, you also see that indeed, like you said, Nicola, fraud and scams, they don't respect our organizational silos. They are even kind of leveraging the fact that our organizations are silos. And I remember discussions about fraud with very senior banking people as we set up a kind of innovation sparring board for our company at G&D who said, yeah, I mean, sometimes at a bank, the fraud information within the bank doesn't come together because fraud is within the product silos. There is the card-related fraud, there is the credit transfer-related fraud, there is the credit product-related fraud. And this is when I realized, oh my God, so there is so much to do to connect the dots and to create a networked defense against the threat that was already networked.
It makes so much sense, and it always astonishes me how siloed organisations are. You know, when you go and draw them out nice and neatly on the organisational flowchart, it makes sense to have those silos, but working in practice, it's so difficult. And in payments particularly, one of the things that always struck me about payments is there's a payments infrastructure. When a payment is traveling and, you know, you're sharing that data to make the transaction happen, it goes across this infrastructure of this payment rail where there's loads of different things intersection, whether that's your cybersecurity, sanction screening, all these different things are happening. And that's why it really shocked me when working with Salv and seeing Bridge is that this infrastructure layer around data sharing really wasn't there. But actually the culture of sharing across infrastructure rather than ad hoc really is embedded into the payment system. We just needed that layer. So you've now spent the bulk of the last 2 months though on the road. Paint a picture for me. Who are you actually sitting across from in rooms when you're having these conversations, and what are they really about?
Yeah. So I feel myself a little bit like when you are hungry and going to a hotel breakfast with everything you can have on the table, so just don't know where to start first. And there is so much eagerness and appetite for getting this right, because let's face it, fraud people, also the money laundering related experts, they already know that they have to talk to each other also across banks and sometimes even across borders. And what they do out of necessity is that they call each other, they send an email, hopefully encrypted, they share sometimes lists and Excel files. We don't really want to know what else, or they use very structured but very slow, swift messaging. So they already have to reach out to each other because they feel the pressure. So when I'm talking to banking people, but also people at bank associations, at central banks, at multi-bank IT setups, we start with usually acknowledging the reality. So to fight the modern forms of money laundering and fraud and scams, banks already have kind of collaboration. And what we are then discussing is how to bring that collaboration to a structured, compliant, logged, and fast working platform so that it doesn't depend on whom you happen to know at the other bank and whether that person is on duty today or was on holiday. And that conversation opens the doors because what we are talking about is in this sense not disruptive. The thought that people across banks have contact to each other, that's normal for a lot of fraud people. They are just looking for the way how to do it more effective, but also more compliant.
I had a PhD student under me and she'd worked in financial services, and she was looking at the idea of rebelling against compliance as a form of like fraud, essentially as a form of protest. And I remember having the first conversations and saying, you know, why would this be a thing? You know what, like, I don't really understand. And she said, I've spent 20 years in banks. And what's happened is over the years, we've had more layers and layers of compliance. And she said, at some point, you begin to feel like you're the problem. You know, when we have clear desk policies and then you're being written up or you're being punished because, you know, you left a piece of paper out, and now the standard is that everything's got to be filed away. Obviously, back when we had a lot of paper around, now we're in paperless environments anyway. But it was this trend towards you've got to do things in this way, you've got to have this structured. So coming from having those conversations and her showing me examples of how people in banks had almost rebelled against that because, again, you know, they didn't feel like they were being supported, they felt like they were being punished. It surprised me then that these infrastructures weren't already there around data sharing. And again, this is where it keeps coming back to that term infrastructure, because actually, like you said, this happens informally and people don't necessarily want to be doing it informally because, like you say, if someone moves, if you can't get through to that person, our practitioners are so acutely aware of how up against the clock that they are in their work and how this impacts real people, because ultimately they may have to pick up the phone to someone and say, we weren't able to stop that in time, or I'm really sorry, the money's gone. So they see the harm. We then have a responsibility to ensure that they can do that in a safe, compliant and kind of methodical way, rather than just on a hope and a prayer that the guy that they know in the other bank is in that day.
Yeah. And that's actually what's really encouraging, that the eagerness to jointly screen suspicious cases, to jointly investigate such transactions, like you mentioned, is there. It's just many bank association people, senior fraud people were not aware that it is also possible based on an infrastructure. And once I'm able to share that we have been doing it actually since 5 years already, so this is not a disruptive new technology or a new kind of promise I'm making, and they will be the guinea pigs to test on them. This is something already working, tested, went through a lot of hoops and made it more mature. And now it's available at a, let's say, low entry hurdle level, low friction level also to others. And where it gets really encouraging is when we discuss that this is actually not a technology challenge, that there is this one technological magical way to do data sharing. You have to design a good and pragmatic kind of privacy enhancing layer that fulfills the GDPR requirements. And even more importantly, you have to design the whole governance around it in a way that the bank association people feel that somebody is walking with them when they start that journey, when they start talking to the data privacy officers in the banks, when they start talking to the data protection authority in their country and other regulatory authorities. There is someone like a mentor, an experienced sage next to them. And this is where we come in. We bring in usually all the templates, the governance experience that kind of bring the message, you don't walk alone.
I guess I'm really interested in like whereabouts in Europe are having kind of, I guess, some of the most serious discussions about this right now, but also where are you signposting them to?
Yeah, so the good news is that it resonates across Europe everywhere. And even beyond Europe, I just had a conversation with a global kind of multiplicator organization who says, yeah, and we have to look at Central Asia and other markets where also fraud and scam is a real issue and banks are worried. And what was also interesting, it became clear to me, it resonates in a different way, dependent on, let's say, the starting situation. For example, there are markets that already have a very strong culture of multi-bank collaboration, and not only a culture, but a track record with various multi-bank setups from Spain to Belgium to also countries where there is a very strong central regulator who really takes the mandate in an operational way. Let's say my old country, Hungary, also countries like Romania. And in these countries, driven by either multi-bank setups or from a central regulator, there is already movement in the multi-bank collaborative financial crime fighting space. For example, in such countries, a central risk indicator or risk scoring system is set up by the banks, or there is already a start of a suspicious IBAN sharing type of initiative. And in such situations, what we do is that we acknowledge that there is already a multi-bank initiative, and we look at like how we can connect them to other markets, because we are, and that comes from an independent survey, the only platform today in Europa working cross-border at personal identifiable level data, so PII data. So we can bring in this international connection, cross-border connections to the multi-bank setups that are already championing the case within the country. Or we look at like, okay, the risk scoring that is doing its job to have transaction monitoring is already in place. We can complement it with the joint screening of suspicious persons, for example, in the KYC situation, which is a preventive step. Or we can help with joint investigations between pairs of banks, for example, after the transaction that is still not covered by this multi-bank risk scoring. So we are very flexible working around existing setups. On other markets, they are not yet there because either the regulator is more a bit hands-off or more kind of leading analytically and not operationally, or simply this type of multi-bank joint setups do not really exist. And there we kind of, I would say, almost like create or nudge the demand for doing it. So the eagerness is there, but we bring in the knowledge like how it is possible based on our 5 years of experience, and how is it possible at a low level of complexity and at a reasonable level of cost. And in these countries, and this is still the majority around Europe, this opens the eyes. And then sometimes it takes a longer journey. But for example, if the bank association is convinced about this, then we see in one concrete Central European country, which I still cannot name, but they did their own market research and RFI, RFP process to select the infrastructure that will bring them to this multi-bank fraud joint investigation use case within 6 months. We are proud to be the selected infrastructure. So within the next few months, we are going to implement that infrastructure with them, and they are able to go live within the next few months. So this shows that if there is a strong central player who brings the banks together, at least maybe the first 5 banks or so, and starts it, then it is possible to go live after selecting the platform pretty fast.
I think speed, especially when it's like fraud, time is always of such the essence. And we obviously think about time in the transaction, how long is this going to take? But actually getting these programs up and running, it feels like in some markets we've been talking about this forever, but very little action has happened. We've had lots of nice round tables and sandwiches, but not that much action. So to hear that you're, going from RFP selection to full implementation in 6 months is a huge feat, and not one to be underestimated. To get multi-bank services running within 6 months is just incredible.
What really helps is one good central coordination actor. And the other thing is that we designed our infrastructure in a low entry friction way. So you can start working kind of in a semi-manual way, which means your IT department doesn't have to start a big project, which needs to be prioritized, which takes ages, and then you are maybe not number one priority. You can start in a no-frills way, and we can really onboard the bank within a good week or so. And then once your IT department is able to prioritize your project, then you can automate the whole thing via APIs. And then, of course, you have to do a bit more work, but then it's step 2. So you already see the benefits of why to do that after step 1.
Absolutely. It's just astounding, and a testament to how much Salv just knows what they're doing, to put it plainly. Now you've seen the full spectrum, and, I'm sure there will always be surprises that come up, but in your estimation, where is the gap widest between how an organisation describes its intelligence sharing capability now and what is actually running underneath when you're having these conversations?
Yeah, so what surprised me during my last month is that what everything data sharing can mean. So very often the start of the discussion is that a bank manager or a bank association manager would tell me, they are already doing data sharing. There is nothing to see here. And then we get into like what exactly they are doing, and I'm describing what the banks who are on our infrastructure are doing. And then we realize, well, data sharing is not always data sharing enabling real action. So sometimes data sharing is a more analytical exercise. Like in one country, the fact that banks get together once a month and look at the so-called modus operandi, so what are the scam and fraud patterns, is also data sharing because it's based on shared information from the network. This is, however, not enabling action at the level of a suspicious case or a suspicious transaction. So where we realize that the difference is that data sharing is always good. There is no form of data sharing as long as it, of course, is compliant with all the laws, but collaborative intelligence is always good. What we are talking about is the type of intelligence sharing that is actionable, that leads to one fraudster not being onboarded to the next bank, having been offboarded by maybe 2 other banks already on the network. Or we are talking about, like you said, a transaction with real money involved, getting stopped at the right level or frozen at the right level, and the victim and of course the banks around them, PSPs around them, get their money back.
I think it's it's such an amazing thing to hear about, but congratulations on the pitch for EBAday. And maybe from what you've described so far, perhaps this speaks to some of the success of why you were successful. But tell me about that process. Like, how did you distill 2 months of these market conversations into a pitch for the panel? What did you choose to lead with, and why that?
It's never easy to distill your kind of core mission of a company like Salv in 3 to 5 minutes, which is typically one of these setups on stage when you are in a startup or fintech competition. However, if you have a clear mission like we do, and if you have the experience that you can share with the audience, with the jury, then it becomes much easier. So I think what really helped is the clarity. So I led with acknowledging the problem about networked crime, immediately acknowledging the reality. Fraud and AML people are already talking, but we have that talking to be infrastructure based and structured. And then acknowledge the challenge that, okay, it sounds all good, but what about GDPR? What about my IT department? What about my budget and the costs? And I was able to explain to each of these points how we help the organization, a bank or a banking association or consortium of banks to overcome this hurdle. And then what also resonated well that I was able to explain concrete use cases like the ones we discussed before about joint screening in KYC or doing a quick joint investigation after transaction. And that made people really nod. I saw them in the audience like, yeah, we get it. We get it. And then the fact that we have been doing it since 5 years, that we have already 60,000 sharing, let's say, transactions on the platform and millions of euros recovered through the platform. And that then brought home the point that this is not a PowerPoint kind of paper tiger, but we are talking about already operational activity. And then there was, of course, a good discussion. So on the jury side, there were really experienced business professionals, some of them with long history in payments and or banking and or scaling up enterprises. Honestly, I even enjoyed and appreciated those questions, although they were to test our kind of pitch, but they were very good discussion triggers also, and we continued the discussion even off stage about the monetization model, about the cross-border level, which is already where we started playing it. So that was a joint kind of experience that we created there.
With the judges' questions then in that discussion, did it give you any indication as to where the industry's head is right now with all of this?
I think there is a lot of confusion out there because, as we discussed before, data sharing is kind of accepted as a good thing to do, but it means so many different things. And people are confused also because they hear from more and more vendors, either coming from a generalist a software building point of view or even encryption technology specialist view, or they are coming from the fraud or AML industry, and they move towards shared way of fighting fraud. And customers, banks are a bit confused, like what is possible, and not everybody is clear about the preconditions, for example, that yeah, we can do shared things if all of you guys are on my tool. So, okay, that's a little bit different than open infrastructure where you can have any tool you want on your individual bank side, but you use this sharing infrastructure to get to collective intelligence. So I see the need that the industry gets more transparent in this way, how we describe what we are actually proposing, transparent about the preconditions, so more realistic, and that we focus on the business problem we want to solve and not get carried away by the, let's say, sexiness of the technology. Because this is not a technology problem we are talking about. We have a business problem at hand.
Thinking about it's a really good point that you've made there, this isn't a technology problem, it's a business problem, and we'll be on, or we should be on, discussions of any solution being a silver bullet. And I like that you've highlighted there around, you can use this platform, but you've got to be a client of ours in another area, and this is, tends to be an add-on. I know by working with lots of heads of fraud and that is that your own, each bank's unique kind of combination of how they do determine risk and which solutions they do decide to use. That's somewhat of the head of fraud's secret sauce. It's their secret 12 spices from KFC. They don't want to reveal that. And so I can understand anything where they're either being locked into, yes, you can use this, but you have to use our products. Maybe they don't want to. Or is this going to reveal all of our products? Am I no longer going to be able to have that air of mystery around what we do? Because obviously the more we reveal, the more that can get in the hands of fraudsters. It's not even about competitive advantage there at that point. It's just security. Is there any other kind of challenges or objections from the customer side which can make banks hesitate before kind of jumping into this, even at the point that we're at now where you've proven that it works, you're not selling an idea, there's good, strong case studies of where not only has it worked, it is working, it's doing it right now. Is there any other objections that you can think of that actually we either need to carry on doing work on, or maybe those fears haven't been allayed fully yet?
Indeed, the classical three major obstacles that come up in discussions is, okay, it's accepted that we should do it, but how? And then the first question is, how I gonna convince my data privacy officer within my bank, or if I'm a bank association, then the data protection authority, how it is GDPR compliant. And there we really come with a structured approach. So we even give not only a lot of advice and consulting how it is GDPR conform, but we come with templates for the data privacy impact assessment document, for the data processing agreement. So we really come with a structured, prepared approach. Because the good news is that GDPR itself is not the problem. GDPR always said that fraud mitigation is a legitimate reason to process data. And GDPR also said that when you protect your data, you have to take the appropriate measures. It never said you have to take the maximum possible measures. That would be also a bit strange. It said you have to take the appropriate measures. And we are able to show that end-to-end encryption, that the fact that also the platform infrastructure company Salv does not see what's inside those sharing transactions, so who is sitting in the cars, that the whole structure is built in a privacy protecting way. And this is exactly fulfilling the GDPR requirement for having the reason for data processing, for having the right appropriate measures to protect the data. And we also take into the design of the platform in the governance structure, the GDPR requirements for data minimization, for limited time of data storage, and all these principles in an operational way very seriously. So we operationalize it. We design in GDPR compliance. So this way, we lead the partner, the bank or bank association through that journey. And we strongly recommend that nobody is running just with a simple question to a DPO like, can I share data? And the answer is no, you shouldn't. But you come with a structured proposal. I'm proposing sharing data for this purpose this way. Here is my proposal and documentation. Let's talk about it. And then it becomes a more productive, more structured conversation about concrete points, but that's about the if. And to the other hurdles, like, is it a big, hairy IT project, which my IT department will prioritize maybe in 3 years in the future? And is it costing me a lot of money then? I don't have budget for it. Do I have to fire a number of people because of that? And all these hurdles can be mitigated because joining the infrastructure is a really low friction step. And first, because the infrastructure already exists, so we are not building it together with the customer. And second, because we intentionally designed in an access way, which is semi-manual, so you can start reaping the benefits without having big, heavy IT project. And the costs are also within absolutely reasonable frame, again, thanks to the fact that already more than 100 institutions are using the platform, and it's been there since 5 years. So we don't have like development costs as long as we stay at the normal standard level. So this way, it becomes a really interesting and inspiring conversation for both parties. It takes nevertheless time for a group of banks in a country, especially to get their governance together, to get to the notion of doing it jointly, because in many countries, there is simply no existing precedents or setups for multi-bank collaboration in this space. And this is where we can help. The heavy lifting is on the governance side. It must be then done by the banks or the bank association.
So we've heard an awful lot about your last 2 months, really, and I know it's probably been a bit of a roller coaster, I should imagine, but a really good one with a lot of great rewards. Given everything that you've seen over the last 2 months, how are you feeling about Bridge, about Salv, and about your decision to move over from G&D? What do you think the future of Bridge is? What does it look like?
Well, the mission is fantastic. So the mission is at the business level to enable bank consortia, bank associations, groups of banks in more and more countries to leverage the infrastructure that we built up. And as mentioned, the next country that I was already able to help agree to that is in Central Europe, that will go live soon. And I'm looking forward to more and more such countries joining the platform. And at the same time, we are helping our existing bank customers on the platform to increase the benefits via higher and higher levels of automation. So from semi-manual, we are accompanying their journey to API-based way of working, and that increases the speed and reduces the kind of human work that needed around it. And at one point, we see that once the collective intelligence has created a real good kind of data environment, we will be able to leverage also AI-based agents taking over part of the routine work. Our philosophy is first collective intelligence and then artificial intelligence. But we are already a prompt-first company, so we are very much AI native on the side of how we work. And that's, by the way, also fascinating to see how such a small team can achieve so much, because a lot of the routine things can be done with the support of AI. And at a personal level, my kids see the change. So I am fascinated by our vision. I'm moving around Europe, talking to bank associations and banks all the time. And they really understand that behind there is this mission. And still resonates what they told me. And this is what I also said at the EBAday stage, that Papa, finally, you do something that matters and you do something that we understand. And these words I will never forget.
I really love that. Oh, that's a great way to leave this episode. Thank you, Barnabás. And thank you for being so candid about what you've actually seen out there. And congratulations once more on the EBAday win. If there's one thing to take from this conversation, in my opinion, it's that intelligence sharing is not a single thing you either have or you do not, that it's a spectrum. And the gap between what is claimed and what is genuinely running is where a great deal of the work still sits. So knowing how to tell those apart may be one more of the more valuable skills in this field right now. You've been listening to Follow the Money. If this episode was useful, please follow the show wherever you get your podcasts and pass it on to someone in your network who's wrestling with these same questions. My name's Dr. Nicola Harding. Thank you for joining us, and I look forward to seeing you next time.